It's Brian Preston, the Money Guy.
Okay, let's move on to Shant's question. How much income do I actually need to replace in retirement if I'm saving 25 to 30% of my household gross? Since I'm only living off, say, 50 to 60% after taxes, is that all I need? Is that what I should I plan for? Like, is there a rule of thumb on that?
That's a really interesting question. And Brian, you and I talk a lot about this when we're talking with clients, because a lot of people have this idea of, okay, I make $100,000 a year. I guess I just got to build up enough portfolio so that I can have $100,000 in retirement. And by the way, I'm nowhere near that, so I'm way behind. I don't know if it's going to work. And one of the things, and I've heard you do this a number of times, is there sort of some things you can think about, some things that are true that happen in retirement, some income sources that are present in retirement, as well as some things you're doing while you're accumulating that maybe the situation isn't quite as dire as you think it is.
And tell me if I missed this, Bo, but I think you're alluding to those variables that obviously, because ultimately your retirement number is what's your need from the portfolio, and there's variables that actually lower that number. It's Social Security, if you have a pension, or something. There's cash flow things that are coming your way that will actually lower. So maybe if you're spending, $60,000 a year, $5,000 a month, but you know that you're going to have $2,500 a month coming in from these other sources, all of a sudden your need from your portfolio just got cut in half. So I think it is very important, Chance, to kind of understand, all the variables. That's one of the things. This is exactly the discussion that led to Know Your Number.
Sure.
I mean, if you go to learn.moneyguy.com, we actually created a kind of a tool/course to help you walk through what are all the variables you'll need to know to kind of figure out what financial independence is. And then so you can kind of go ahead and figure out what that number above your head should be to start saving for. And what I like is it also will give you the feedback. So maybe when you get to your mid-40s, you're like, you know what? This has gone so much better because I was investing so heavily during that bear market when valuations were depressed, and I was getting every dollar was buying $1.25 or even $1.40 of value because the market was disconnected from what things were worth. So maybe in your 40s, you look at yourself and you look at the numbers and you're like, maybe I don't need to be saving 25 to 30% or whatever the number was that you were doing. You will have the ability, the privilege of kind of making that decision versus the alternative of that is being that person that didn't save when you were younger and then realizing, hey, maybe instead of taking my foot off the go pedal, I have to save more. That's really the scenarios that you're going to be having that discussion in the future.
And your retirement is so specialized. This may be surprising to you. There are some clients of ours that have retired, and what they needed their portfolio to replace for them was 40 to 50% of their pre-retirement income because of those other income sources. There are other clients that they actually saved in such a way so that their portfolio could provide a pay raise for them when they get to retirement, because they knew they wanted to pay for their grandkids to go to certain colleges, and they wanted to be able to travel, and they wanted to buy that second home, or they wanted to fill in the blank. How much do you need in retirement is very specific around your personal situation. This is why one of the things we always encourage people to do when you're in that 5 to 10 year window heading towards retirement is you better start figuring out, what do you want that to look like? What are you retiring to? What are the things you're going to be spending your time doing? And what are the cost metrics associated with that? Because you really can't answer the question, okay, do I have enough money? Can I do this? Can I step away? Unless you have a good feel for, okay, what do I plan on consuming in financial independence? That's probably one of the more important variables you'll try to figure out in your financial life, but it's not cut and dry. Okay, well, you need exactly 62% of pre-retirement income and you'll be set. That's a good thing to kind of figure out on the front end of retirement, but as you move on the front end of your accumulation, but as you move closer to retirement, you got to get laser precise with that.